Good morning, James. Greetings from Plainview, New York. I took your suggestion and I'm trying to do this Cup POV certification via YouTube. So I hope this works. It's my first adventure with YouTube. So the scenario today is that we're with a credit union senior leadership team during their mid-year review, performance review, if you will. And we're talking about the upcoming renewal, due diligence, marketing, and all that sort of thing. So, so that's the scenario. So let's go from there, and I look forward to your feedback, and I hope this works. Again, my first experience with it. So here we go. Good morning. It's nice to be part of your meeting this morning. We'll be talking about a variety of subjects during this kind of performance review, mid-year review. But one of the things I'd like to share with you today is some interesting research and some findings we have relative to due diligence and insurance vendors and that sort of thing. And this is not a CUNA Mutual advertisement by any means, but I think this might be helpful in your planning going into the next several months and maybe even into the next several years. So I'd like to share with you some numbers. These numbers represent findings from both Ernst & Young, our own organization, and the U.S. Accounting Office. 51 represents the percent of financial services firms that see process in setting risk oversight at the risk appetite, at the management level, at the enterprise level. 26%, however, of those same organizations do not see material progress in embedding that concept in their own businesses. So, risk appetite. Is it working? No. And 37% of corporate boards see no direct allocation of responsibility for risk oversight responsibilities. And that's the board view. Now, why is this important? Based on a lot of different experiences we've had, we see that 89% of credit union failures have occurred directly as a result of the inability to manage against today's risks and the failure to control risk within their organizations. Now, that's kind of a broad statement, but we're going to take a greater look about how that really matters. So, as credit union leaders, you're tasked with both managing your organization in the current state and in the future state, planning for your future needs. However, ongoing contemporary issues like loan growth, income growth, managing employees, branch expansions, all those sorts of things, takes away the time that you may have available and your abilities to project into the future and manage for future risk. So we think that we have a solution for this, and we're honored to work with you today. And I want to kind of show you kind of visually how we see this process going. When you're looking at insurance vendors, essentially there's two approaches. One is what we consider to be proper due diligence. And that's a really good idea to do periodically with all the variety of products and services and things that you do. The other one, however, is kind of the traditional approach, and we really think it's more like price shopping. So, this kind of poorly represents your credit union. And if you're in a price shopping environment, what you're typically going to do is you're going to go out and get a variety of quotes from a variety of sources. Now, they're essentially going to be quotes. They're not going to be, perhaps insurance documents with insurance language and restrictions and conditions and all those sorts of things, the things that really matter. What they're really going to be is they're really going to be more about the carriers, really totally about them and what they're willing to offer you or what they can offer you based on their expertise or the limitations of their policies. The problem with that is that, and there's several. The problem with that is that with a process like this, you could run into undisclosed significant differences in policies that could lead to uncovered claims, which may have a devastating impact on your financials. And not only that, but your reputation as well. The other problem is it's very expensive. Our own studies have shown that this RFP process in the traditional way can cost upwards of $10,000 each time you do this. Is that worth it? Remains to be seen, but we don't think so. And one of the reasons we don't think it is because of, excuse my whiteboard here, because of the potential cost, because of the potential for uncovered claims, it can have a serious effect on the financial performance of your organization. And at the end of that, you're going to end up with essentially something that looks a lot like what you have now, does not represent maybe the changes in your organization over the past year, and certainly does not represent any assessment of your planning for the future. So you end up with pretty much the same policies you had in 2014. You end up with them in 2015, and you have the potential for putting your organization at risk by having uncovered claims, an expensive process that may yield very little return, and might be putting your organization, will be putting your organization in a position of perhaps having negative impact on your performance. Really what that does is it takes you from 2014 to 15, but really where you really are is right back where you started. Here's another approach. What if during this process you could identify a carrier that had an unmatched and really unprecedented approach to risk management and risk assessment in the credit union business? Those risk management services include things like bondability, bondability verification for employees, both new and current, webinars designed to keep you informed, keep your staff informed, keep your board informed about a whole variety of contemporary issues confronting the credit union business. Our most recent webinars have included things like social media, advanced fraud training, even things like weapons and violence in the workplace. And we both have live ones, we have live webinars, we also have old ones that are archived, and we also have things that you can do kind of on an on-demand basis. So it's a lot of flexibility, a lot of ability to educate and train yourselves and your employees. Now also, what if you had a company that is the only company in the country that has credit union specific policies, meaning not policies that are designed for other types of industries like commercial banks or financial services firms, but for credit union specific policies. And we've been writing these policies for credit unions for over 50 years. We constantly strive to review them and rewrite them to the advantage of our customers based on not only ongoing trends but emerging risks as we see them. A good example of that is this year we're adding an enhanced defense reimbursement endorsement to our management liability policy. Without getting into too much detail, we can at a later date. Let's talk about what maybe that does. The regulatory environment in this country is increasing, and it's a real burden on organizations like yours. We recognize the fact that that is a big issue. So we're including an endorsement in many of our renewals that provides for reimbursement of legal fees, legal expenses relative to regulatory actions. It's unprecedented in the industry, and it is not something that any of our competitors have contemplated, nor are they actively pursuing it. Now finally, what if your carrier had the ability to bring strategic resources? So to give you the ability to do things, to plan for the future, and to go forward with future plans, knowing that you have access to best practices, have access to our experience in things. This can be things like mergers, new products, new delivery channels, anything like that. We have a great deal of resources on this. And again, part of this is in fact our team approach. You have a very highly qualified sales executive. You have someone like myself. You have a dedicated underwriter. You have all sorts of people back in Madison that know and live the credit union industry and experience. That is a tremendous resource in terms of how you plan for the future, how you manage the expense of planning it, and how you manage the expense of assessing, the risks that confront new ventures. Where that leads you is not back to the beginning, like the price shopping option, but it takes you to 2015 and beyond with great confidence that you have a partner in your risk management process that has a variety of risk management resources that you can use, has credit union specific policies, and has the strategic resources to help you going forward. So again, risk management resources, credit union specific policies, not to cost you money with uncovered claims, but to save you money, and strategic resources. Again, this can help you out as well from a dollar standpoint. So there's a lot going on here, and we think that this represents a better option than simply the traditional price shopping. What do you think? Let's talk about your questions, your comments, and where do we go from here? Thank you.